Click the bell icon to get latest videos from Ekeeda.
Hello friends, myself Professor Uday Bhukre and now I am welcoming you on your own YouTube channel Ekeeda. Hope you are watching my videos regularly and getting benefit out of it. Friends, today we are going to learn for CA Inter course accountancy subject topic name redemption of preference shares. Question number 1. We are going to solve this wonderful question, students. Let's begin with question number 1. Balance sheet of X Limited on 31st March 2000 X3 is as follows. So balance sheet is provided. Shareholders fund share capital 2,90,000, reserve surplus 48,000. Trade payable 56,500. Tangible assets, non-current investments, cash and cash equivalent, which is a bank balance. The share capital of company consists of rupees 50 each equity shares of rupees 2,25,000. That means out of 2,90,000, 2,25,000 is equity share capital and rupees 100 preference shares of rupees 65,000 rupees. So 65,000 plus 2,25,000 comes to 2,90,000. Okay. So they have how many equity shares? Shares will be 650 and amount of share capital is 65,000 preference share capital I am talking about. And reserve and surplus comprises of profit and loss account only. They are saying that in reserve surplus we are having only profit and loss. In share capital we have a equity share capital as well as preference share capital. In order to facilitate the redemption, preference shares at a premium of 10%, the company decide to sell out the investment for rupees 15,000. Look at the investment book value 31,000. At what price it will be sold? 15,000. That means there will be a loss, and that loss we will debit to profit and loss account. Okay, so that we will see. To finance the part of the redemption from company's fund subject to leaving a bank balance of rupees 12,000. How much bank balance they want? They want minimum bank balance of 12,000 rupees after redemption get over. To issue minimum number of equity shares of rupees 50 each at a premium of rupees 10 per share to raise the balance of the fund required. That means to the extent shortage is there, they will make a fresh issue of equity shares of rupees 50 each at a premium of rupees 10 per share. So fresh shares will be issued. You are required to pass necessary journal entries to record the above transactions and prepare the balance sheet of as on completion of the above transactions. So that we will do. Now before I begin with the main answer, I need to firstly decide how many fresh shares I need to issue. For that purpose, information is provided. They give you that minimum bank balance, how much they want, 12,000. So firstly, I will draw a small working note to decide how much fresh issue I will be doing, and thereafter we will go ahead with our journal entries. So before I begin with the main answer, I am beginning with the working note number 1 for deciding the fresh issue. Students, fresh issue depends on your bank balance. Okay, so here I will practically prepare a bank account. Students, I am preparing a bank account, so I am just writing the opening balance first. In this question, they give you bank balance 31,000 as the opening balance. They mentioned that company will sell the investment for 15,000, so cash comes in. Investment sold 15,000. Preference shares to be redeemed at 10% premium. Amount of preference share is 65,000, which is at 10% premium. By redemption of preference shares, this amount I need. Information number B says that minimum bank balance, how much they want? 12,000 rupees. So I am writing 12,000. $37,500, which is a balancing figure, it is expected amount from fresh issue. So I can say for this purpose I will do the fresh issue of equity shares. Number of fresh shares to be issued. For that purpose, look at information number C. To issue minimum number of equity shares rupees 50 each at a premium of rupees 10 per share. So issue price will be 60 rupees. So how many number shares to be issued, that we will decide So company will issue 625 equity shares of face value 50, but it will be issued at a premium. So securities premium I am expecting is 10 rupees. So in this way I decided how much fresh issue we need. This 12,000 I will directly write in my revised balance sheet. It is a way how I calculated the fresh issue. Okay, so we'll go ahead with the journal now. In this question, if you notice, date of any transaction is not given. They are saying preferential they are having, but they were issued on 1st April 2000 X1. So at the minute date column will not be important, but I will just write serial numbers. We will go in the order of the transactions. What they are saying, please have a look. In order to facilitate the redemption of preference shares at a premium of 10%, the company decided, number one, what they decided? They decided to sell the investment for rupees 15,000. So my entry will come for sale of investment. What is the book value of investment? 18,500. At what price it was sold? It was sold at 15,000. So 15,000 will be debited. So book value of the investment 18,500. It is sold for rupees 15,000. So we will incur a loss of rupees 3,500. This loss we have debited to PL account. So to that extent, availability of PL account will come down. So your PL account originally was standing at rupees 48,000. Now it will reduce by 3,500. So availability will come down by that amount. That is only understanding. Being investment sold at loss. In order to facilitate redemption of preference shares at a premium of 10%, company decided to sell the investment that we have done to finance the part of the redemption from company's fund subject to leaving the bank balance of rupees 12,000. For that purpose, we have to also read the next line. To issue minimum equity shares of rupees 50 each at a premium of rupees 10 per share to raise the balance of the fund. That means firstly I will make a fresh issue and then I will decide how much fund will be used from company's available reserves. Fresh issue, we have done working note. In this working note, we decided that we will issue 625 equity shares of a face value of 50 rupees at a premium of rupees 10. So I will pass the entry for that. So entry for fresh issue, bank account debit to equity share capital account and to securities premium account based on our working note. Being fresh issue of 625 equity shares of rupees 50 at rupees 60 per share, it is as per our working note number 1. Now, sir, how much fund we need from our reserves? Now, before I proceed further, I tell you one thing. As we have learned in our theory, whenever you use the fund, your existing reserves for redemption purpose, you will create CRR, that is capital redemption reserve. In my existing case, our fresh issue is giving how much amount of capital? 31,250. How much capital we are going to redeem? 65,000. We are going to redeem 65,000 worth of face value of preference shares, right? To that extent reserves are used, to the extent required reserves are used, and with that reserves we will create CRR. So आराम से सोचेंगे मेरा रिडम्पशन का फेस वैल्यू कितना है 65,000, मेरा फ्रेश इशू का फेस वैल्यू कितना है 31,250. तो जो डिफरेंस है वो मेरे फंड में से आ रहा है, जो डिफरेंस है वो कहां से आ रहा है? फंड में से आ रहा है. लेट मी डू द एंट्री, देन आई विल राइट द कैलकुलेशन इमीडिएटली ऑन दैट. So students, what is face value of preference share capital? 65,000. How much fresh issue capital we are receiving? 31,250. So how much additional replacement is required? Additional replacement required is 33,750 and it will be taken from your reserve and that will be transferred to CRR. Being CRR created, very short and sweet narration we will keep. How much CRR will be used? To the extent shortfall is there in replacement. See, preference share capital should be replaced before you redeem. The entire concept behind this CRR account is replacement. See, when you are removing the preference share capital, rule says that that capital should be replaced. Section 55 says that capital should be replaced. रिप्लेस कैसे होगा? या तो आप फ्रेश इश्यू करो या फिर सीआरआर क्रिएट करो. तो आई कैन से मेरा रिप्लेसमेंट जो होता है वो हमेशा 65,000 का होगा. अगर आप ठीक से चेक करोगे तो ये जो इक्विटी कैपिटल है 31,250 और 33,750 इसका टोटल करोगे तो वी आर रिप्लेसिंग 65,000 बिफोर आई रिडीम इट. So be careful, replacement will be of the preference share capital which is to be redeemed. Okay, so this we have done. Next entry, this replacement is done. Now next we will show amount payable on redemption. Amount payable on redemption, what will be our entry? Preference share capital account debit, premium on redemption account debit to preference share holder account. How much preference share capital we are going to redeem? 65,000. At how much percent premium? 10% premium. So total payable will be 65,000 plus 10% premium. So my entry will come accordingly. Being amount due on redemption of preference shares at 10% premium. This will be continued on the next page, so I am writing here continued. Entry number 5, to make the actual payment. Being actual payment on redemption. Last entry, premium on redemption will be written off against profit and loss account. How much premium we are supposed to pay? Rather we paid 6,500. So 6,500 will be written off from your profit and loss account. It will not be written from securities premium because company is subject to accounting standard, and based on that I will not debit it to the P&L account. Do section 52 allows me that. It is not debited to securities premium, it will be debited to profit and loss. Being premium on redemption written off. So our journal entries comes to an end for this question. But what question is asking you? Question is asking you journal entry that we have done and prepare the balance sheet on completion of the transaction. So we need to prepare a balance sheet. Come to the next page. Balance sheet after redemption. Particulars, note number. First part, as we know, equity and liabilities. First heading in equity and liabilities, shareholders fund. Under shareholders fund, A, share capital. Note number 1 we will prepare for that. Reserves and surplus will write note number 2. There is directly current liabilities, so I will write current liabilities, which include only one thing, that is trade payables. So as it is, I am copying. And after this we will have a total. In assets, number one, we will have a non-current assets. Under non-current asset we will have a fixed assets. Under fixed asset we will have number one, tangible. Tangible fixed asset, I think we have not changed at all, so it will be as it is, 3,45,000. If you look at the investments were sold. These investment we have sold, therefore it will not come in my new balance sheet. Then number two, current assets, which include cash and cash equivalent. Cash and cash equivalent have only one amount, that is bank balance. In the given example only, they gave you that minimum bank balance required is 12,000, so it will appear in your new balance sheet. In this way, asset side is over. I will be able to take a total of asset side 3,57,000. But I will take a total of liability side only when we are ready with these two notes. So notes we are drawing. Notes forming the part of accounts. Note number one, share capital. In share capital, first and foremost, we will write authorized capital. Looking at the question, they have not given you authorized, they gave you share capital consists of these things. Authorized capital question has not given you, so we'll put it as a question mark. Then I will write issued, subscribed and paid up. Now see what they gave you earlier. They gave you share capital of company consists of rupees 50 each, equity shares of rupees 2,25,000. So earlier we were having equity capital of 2,25,000 of rupees 50 each. That means we were having 4,500 shares initially. Equity shares firstly, or I can say initially, it will be 4,500 equity shares. Plus we have issued in the current period or current transaction, we have made a fresh issue. We have made a fresh issue of 625 equity shares, so it will be added 625. We will have a 5125 equity shares of rupees 50 each. So it comes to 256, 250. So equity capital done. What about preference share capital? You can notice preference share capital is already debited in my entry. So preference share capital is cancelled, so it will not come, it is redeemed. So my total capital will be 256, 250 only. Number two will be reserves and surplus. In reserve surplus, we know earlier we were having PL account of 48,000, but that undergone some changes. So we will write that. Initially my PL account was 48,000 as question gave me. Now I will look for the entries which affected my PL account. Okay. In my accounting entries, I noticed that there was a loss on investment which is debited to PL account 3,500. Next, again PL account is debited for creating CRR 33,750. In my last entry, I debited PL account again for writing of premium on redemption. My PL account has come 4250. New reserves which are coming. New reserves you can notice in your entry number 2, securities premium is created 6250. Entry number 3, you can notice CRR created 33750. Besides this, I don't feel there are any other reserves. So let me take the total. 44,250 is our total. Hopefully my balance sheet should tally. It is telling at 3,57,000. I hope this question you have understood. Question is exactly which is expected in your exam. So absolutely this question, you can expect this type of question in your exam. So I want you please go through this question at least for twice to understand it much better. Then too, if you find any doubt, please put in the comment box. We will try to resolve your queries at earliest. Thank you for watching this video, students. God bless you all.